So we're a few months out, and what the heck is going to happen in the real estate market when the election comes? I'm Realtor Nick Belmore, and I have been getting a ton of questions and seen a ton of conversation when it comes to the election and how it's going to affect our markets and how it's going to affect housing as we go forward. So I wanted to dive a little bit into this today and take a look at a few of the factors that have affected the real estate market when it comes to elections in the past and how different leadership is going to go ahead and really influence what's happening. What is their stance? We're going to take a look at that today. The other thing we're going to dive into today is we are going to take a look at what the top economists say needs to happen to improve the market as we go forward today. It's interesting because in polling out there, it seems like a lot of people feel that we're not on the right track when it comes to the real estate market. And of course, a big basis of that is coming into affordability, supply, a lot of factors. So let's dive in for a moment. Let's start to take a look at what has affected the economy and what has affected the real estate economy specifically when it comes to past elections. One of the biggest things that has an effect on the real estate market and has affected the real estate market in the past is the economic policy uncertainty. What party wants to go in which way? And keep in mind, this is not going to be a political as in, hey, this person's doing that, this person's doing that. In this video, we're going to focus on a lot of the broad strokes. And I think in the end, policy-wise, we're going to see that it's not a humongous difference as we go forward in the party. So let's take a look at economic uncertainty. Ultimately, in this election, we do see that there's definitely two distinct directions that economic policy can go in, and that uncertainty of what direction it is oftentimes can freeze the real estate market. Having maybe demand pent up, a lot of people not taking action at that point. The other thing that has drastically affected the housing market in the past when we start to look at past elections is interest rates. And we have seen a lot of movement in interest rates right around the time of election. That being said, as we start to look forward now, the Fed has already announced that there will be at least 2 interest rate cuts. How drastic will they be? We don't really know. So again, I feel like this kind of stacks into the first thing is the economic uncertainty that can affect the market around this time. The next one, number 3 on the list, and honestly, in my experience, and I've been through a few election cycles at this stage, I would say this is probably one of the biggest ones, and that's consumer confidence. What does the public feel like? Because here's no question about it, when there is more confidence that the economy is going to improve, when there is more focus on positivity and job growth and those pieces in the future, we know psychologically that that absolutely has an effect. And when people start to buy more, it absolutely helps to push things forward and help the economy grow. So consumer confidence is definitely a big one. Obviously, when that gets into a lot of opinion pieces on where people feel that that confidence is and what will cause growth within the economy. But when people take a look and they feel that the future is bright, there's no question that they are going to go out and purchase in anticipation of those better times going forward. And we've seen it through many election cycles. The next one, and this can be a big one in several ways, is regulatory policy. What is whichever party looking at in less or more regulation, or is there needed regulation in a specific sector? And yes, there probably is some regulation that should happen in the housing sector. We're going to talk about that a little bit in the second half because we wanted to know, what do top economists say? What do they say needs to be fixed in the market? And that's definitely a piece, so it makes sense. Last but not least, what has affected in the past tax policies? No question about that one. Tax policies can be a big factor when it comes to real estate, either incentivized or de-incentivized. If maybe we were to start seeing a tax on capital gains that's even higher, or maybe elimination of the 1031 exchange, all those things could start to have an effect on investors and how they interact in the housing market. So definitely an interesting concept as we go forward, as we start to look at this election cycle coming up. In this segment, I'm going to take a moment, and what I'd like to do is I'm going to go through the top 5 factors, right? What did the economists say? What we just went through are the factors that have affected it in the past. However, we're going to take a look now at what top economists say are the fixes we need for our current situation. And so a lot of you know we are definitely seeing some changes in the housing market. What could really stabilize that? What would make it better for the average American as we start to go forward? Not just here in West Michigan, because of course every place has their own unique factors that were affecting this, but here's some of the broad strokes. Let's go over the top 5 things that economists say are going to help to change and fix our market. Number 1, across the board, I think this is unanimous: housing supply. We have been undersupplied in so many areas of the country. On top of that, even areas that have a good amount of supply, even the ones that maybe have lost people, so their supply has started to increase. A lot of it is aging, and it's an infrastructure issue as well. So without a doubt, we know that supply is probably the number 1 issue that we're looking at in the country. And so why? What are some of those things that ultimately affect supply? No question, a lot of it can be regulation. And if you've ever built a home in the past, you know how long that process can take, even before they start to put in the foundation of the home. You might have a 2 to 3 month process before they even begin to build the home. And a lot of that does come into site evaluation, it could come into zoning, it could come into all these different pieces. However, economists are telling us that there is too much regulation in the building process for us to have a healthy economy in real estate and enough homes to fill the supply, or to fill the demand as we go forward in this process. So what happens? Over-regulation leads to a slower ability to fill the demand for housing, and we've been in that cycle for a little while now. And of course, what do we look at on both parties, right? So as we look at the Republican Party, they agree. This is one of the first times in a long time that both parties have agreed and actually acknowledged that supply is a problem in the housing market. Spoiler alert for everybody watching this, this isn't brand new. Supply has been a problem for the past 7 to 10 years in a lot of our housing markets. Now, we did see a big mass migration through the years of COVID. A lot of people really started moving and changing states. So of course, what did that do? It already started to tax that overburdened system when it came to supply and demand in the real estate world. And there's a couple of reasons for that. We're going to get into that more as we go forward. At this stage, there's not a lot of difference when it comes to supply. Both parties, the Democrats as well as the Republicans, both agree that supply is an issue and it's absolutely something that needs to be focused on. When we start to look at both parties, they're talking about tax incentives to help to create more supply, to help builders become in the position where they are specifically going to be seeing an incentive on the tax side to build more of the affordable housing, right? Because we know a lot of builders today, they move to the mini mansions. Why do they do it? Because they need to focus on profitability. They're running their businesses, and it's more profitable to build the mini mansion than the normal house. However, the problem that creates is that most people don't start out in a mini mansion. They start out in a starter home, build their equity, and then move up as buyers as their family grows, as their needs grow, as their equity builds. So if we cut out the step of having affordable housing for people to get into and develop equity in, no doubt it's a problem, and we're finally actually starting to see an acknowledgement of that from both parties in government. So big yay on that one. I'll take that as a win as we go forward. Number 2, economists are telling us that affordability is a huge issue and rent stabilization is a piece of that. Now, I will say, I'll start on rent stabilization because I really do have some mixed feelings on that. Number 1, I do believe in a free economy. What are they willing to pay? And I also believe that if you want to stabilize rent, it does come into creating more supply at that stage. Now, obviously, in certain areas, there's such an imbalance between availability and the people that want to move there. I don't understand in depth in some of those situations where the bonus of rent stabilization is. That being said, too, we also also do need, and we should be incentivizing the ability to create more places for people to rent to get started on that next step to home ownership. And in my own personal opinion at this stage, having giant corporations buying up single family homes in bulk is not in the best interest of the population of any of the areas where that's happening. So while I do believe that we do need to focus on some regulation when it comes to the building process, I would also say some of the regulation does need to be focused on these giant equity firms and these big companies, and especially foreign investment when it's coming in and buying up the inventory of single family homes and then making it unavailable to the people who want to move in or driving up that price in those specific areas. So definitely an issue. When we start to talk about affordability, both parties are focused on giving a credit to first-time buyers and a lot of that process. Obviously, a piece of that comes into a little bit deeper of the system. Why is it so expensive? We're going to get into that as we go forward too. Number three, economists are saying it again, reducing regulatory barriers. This is obviously a big point, and they're talking about in this situation, the building process, the lending process, all around, they're talking about they feel that needs to happen. This is where we start to see a little divergence in the parties. Obviously, on the Republican side, there's a little bit more focus on reducing those regulatory barriers. On the Democrat side, they're a little more focused on more regulation, as they're feeling that that's going to help to curb where we're going to see costs in lending, and it's also going to go ahead and regulate where we would be on down payments and risk associated in loans. So not a lot of details on how that would happen, just a point on one of their Democratic websites. So I'm not quite sure. Obviously, want to look more into that as we go forward. Number four, this has been a huge one for me. I've been talking about this one for quite a while myself, just the same. Shortage in the trades. For those of you that might not know, I did start out as a frame carpenter before I got into real estate, and directly out there in new subdivisions building the structure of homes. And through the years, as I've watched that process, and obviously we work very closely with a lot of our local builders here in the Grand Rapids area and all of West Michigan, and they tell me all the time that getting skilled trades has been an issue. And I look back to this even as I made my transition from working as a carpenter into becoming a realtor. At that stage, one of the things I was already starting to see is when the market started to crash, it was actually the skilled trades that took some of the biggest hits because their work supply almost evaporated overnight. And these are people who built a lot of times large labor-based companies in order to support these builders. And so, of course, what happened? So many went out of business and they left the industry completely because of the giant shock that happened at the system. And of course, so much of that came on the lending level and the risk that was taken, and obviously the insurance behind that risk as that process went forward. So nothing these tradesmen ever could have been able to control. And so what happened? So many went out of business. And the reality is this: the market came back quicker than a lot of those tradespeople could rebuild their companies. And a lot of them were left with that sour taste. So when we start to talk about the supply and demand piece, a very overlooked piece of that definitely comes into the amount of skilled trades. Neither party is really addressing this situation. So I'll go ahead and address what do I think could be a solution in here. No question that we should be really promoting trade schools and apprenticeships more in the country today, especially as we look at higher education. We could all probably agree there's some ridiculous degrees out there. One of the ones my father used to joke about was underwater basket weaving. And so if we look at the education system, how much of it is really focused on some of the most important jobs out there? Some of the jobs out there like electricians, the jobs out there like masons, right? Concrete finishers are a big piece of today's society. So going through that process is definitely something that we need to take a look at. How do we increase the stability specifically for the trades? Because we all know all the stories out there, right? And somebody's probably known somebody that started a construction company and at some point were sidelined really by forces beyond their control at that stage. So we need to be able to have some stabilization. We need to be able to promote the trades out there in the economy a little bit more and shine a little bit more light on some of the guys guys out there doing that job. And you do see it now on YouTube more than you ever did in the past. I think that's awesome. I follow a lot of those channels myself, and I think really bringing some stability into the trades and really helping more people get in and giving more people an opportunity to be entrepreneurs in the construction subcontracting business is absolutely a way that we're going to be able to help that process. Okay, number 5, and it's long-term financial reforms. Here's the thing, and we know that this is the case if we start to study the last 20 years. There's been so much manipulation of the real estate market based on where rates are and based on incentives. So if we start to go into this process and we look at financial regulation specifically, we've seen a swing of all the way down from 2.5% to recently a maximum of really 8.5% or so is what we've seen in our area. Now, if we go back historically, even to the 80s, obviously we know there was a short period where rates were all the way at 18% on some of those 30-year fixed rate mortgages. That's a huge swing. It's a lot of uncertainty in that cost. And of course, who's the most affected right now? Our first-time buyers, a lot of our young people, the people that are starting to enter the market right now, obviously have some of the biggest disadvantage in that. Did it make sense to artificially plunge those rates way down during COVID and then create the feeding frenzy that market became? And of course, then does it make sense to slam those brakes on by jacking the rates up to one of the highest that we've seen in the past 10 to 15 years? I don't know that makes sense. If we want to have continuous growth in the housing market, there's no question stability is going to be a big piece of that. These giant ebbs and flows in the market ultimately do lead to more problems for society than they do provide security, which to me is the ultimate goal. So hopefully you got a little bit of value out of this insight. I'm interested in what you guys think. Go ahead and leave some comments below. What are your thoughts? Obviously, if they're ridiculous, I'm going to delete them out of there. That being said, I'm interested in your take on where the market needs to improve. How do we create more affordability in that process? What do you guys think? And if you did get value out of this, go ahead please and like and subscribe, because it helps me get the information out to more people, create more videos, and it lets you know when our new videos come out every single week. I appreciate it. Thank you guys so much for the support.